Hedge funds have been ramping up their bets against beleaguered parcel service Royal Mail ahead of its interim results this morning as letter mail revenue plunges and the bitter pensions dispute with workers rages on. The firm was recently dumped out of the FTSE 100 and its share price slipped to a new low of 369.9p earlier this month, but hedge funds believe that it could sink lower with 2 new short positions taken out and another position ramped up. Hedge funds use shorting as either a risk management tool to minimize exposure to a long position or because they believe a stock is overvalued by the market, and 3/4 of Royal Mail's shares are now out on loan to short sellers. Royal Mail has dodged a strike in the run-up to Christmas, but concessions to trade unions could bump up the firm's costs, and marketing mail revenue has been struggling in a more cautious post-Brexit ad environment. Ahead of the interim figures, Royal Mail nudged up 59p to 389p. No news is good news at battered defense specialist Cobham, and an uneventful trading update boosted its shares 3p to 130p. The company's recent updates to the market have been plagued by profit warnings, and analysts said that trading coming in line with expectations was an encouraging sign for the turnaround. Precious metal producer Fresnillo bucked the downward trend in the mining sector, buoyed by the double whammy of gold prices benefiting from the rush out of equities and HSBC upgrading the stock to buy. HSBC told clients that Fresnillo is still the premier name in the sector despite the prospect of rising operating costs to lift it 42p to £13.25. Bunzl clawed back 31p to £21.46 as Singapore's sovereign wealth fund GIC Private upped its stake in the distribution firm to just over 4p. Tiny AIM-listed mining investor Metal Tiger sank its teeth into the board of Australian miner Kingsgate Consolidated after upping its stake in the bombed-out gold producer, which has shed 96% of its value since the turn of the decade. Metal Tiger urged shareholders to back its plan to replace all but one of the company's board, which the activist investor says has overseen a massive destruction of shareholder value. Kingsgate was once valued at $1.25bn, £1.4bn, but its share price plunge has left it worth just over $1.100m. Global stocks recorded their worst losing streak in 8 months as the turn in sentiment on markets extended into a fifth day. Commodity prices slipped off recent highs and investors continued to fret over Republican tax reforms, with London's heavy weighting of oil and mining stocks dragging the FTSE 100 down 41.81 points to 7,372.61.